You are listening to ChartingWealth.com for Monday, the 13th of July, 2015. As always, we start with IYY, which is the total market. This is an ETF, an exchange-traded fund that tracks the total market. We always like to see what's happening in the broad market before we get into the two indexes we look at and gold. Let's look at what's been happening. We see, if you are listening to us on audio, we'll tell you what we're seeing. We see, of course, back on the 23rd of June, where the market reached its top. It then rolled over. This was after a Fed announcement that there would be no stop to the quantitative easing in the very near future. And even if it did slow down, they would simply raise the interest rates slowly. I guess, yes, that's... And of course, that shot the market up. Well, what have we seen happen after that? Reality started to sit in. Well, we saw the market roll down. And again, this is a two-day chart on the 25th and again on the 29th and again on the 1st of July. And then we saw a little bit of uptick around the 2nd. And then we saw the market rolling over further on Tuesday the 7th and further on Thursday the 9th. And then on Friday, the market ticked around. That was this last Friday, the 10th of July. The market started to move up. It actually broke through a very good two-day trend line that showed us about 8 days of movement. And we see that derivative oscillators lost a little bit of its speed. That is on our chart, a long red line. It is shorter on the next two-day candle, that is the Friday two-day candle, than it was on the prior two-day candle. We also see a coming together, a closer movement together, what we call a converging of the MACD and the MACD signal line, which is the red line. We have been in a confirmed down move since the 23rd, well, right after the 23rd, after that high movement. The market broke back over and started moving down on the two-day. Now let's look quickly at the half-day or the 4-hour chart. You can see where the market started tapping along a bottom we had identified right around 103. And the market then pulled over and started moving up. It's crossed over moving up on the 4-hour chart, and it has broken through, as you can clearly see, those of you who are watching. It broke through in the morning and pushed through even further on Friday afternoon. So what does that tell us? Well, that tells us that we might be seeing a changeover in the market. If you had made a lot of money on a down move, say you're in an inverse fund, you might, of the total market, you might be looking at taking some profits now. It is not confirmed. We have not had a crossover going up yet on the two-day chart, but we do have some significant movement breaking through our trend line. Does not mean that the trend has changed. It hasn't crossed over going up on the MACD on the two-day chart, but we're seeing some definite movement and potentially maybe some bottoming out. If you are looking at the chart, you can see around 103, 103.24. We had some support over the last few days, and we also in the past saw some support. If we go back to the 27th of March, we go back again to the 11th of March, we see that the market has hit that mark before. We also see, well, yeah, and we can see some movement all the way back actually into November or so where the market topped out about there. So potentially might be an area where we see some support. We'll keep looking at that and judging it as time tells, as it always does. Now let's move over to the two-day chart on SPY. This is, of course, the S&P 500. It tracks many times somewhat similar to the IYY, the total market, but of course it's 500 big stocks, and one would expect it would be somewhat similar to that, but not exactly the same. The move over going up not nearly as strong. There is a large green wick on the top of the two-day chart, meaning, of course, that the bulls had pushed the market higher and the bears had pulled it down, although the bulls did win in the end on this candle. The market on Friday, the S&P 500 was up 1.26%. Total market was up 1.28, so about the same, but the candle patterns look a little different. The derivative oscillator did lose some speed, and there is a convergence, a coming together closer on this two-day candle in the MACD. Now, of course, the SPY crossed over way back between the 28th and the 28th of June and the 1st of July, and has made significant down movement since then. Again, a little bump up when the Fed met and came out with their prognostication, actually their decision not to increase interest rates, and we've seen a steady move down until, of course, this two-day trend line was broken. Why is this two-day trend line more significant than many? Well, because it connected 6 days or 3 two-day candles. So we pay attention to that and we'll keep watching. Now let's break back a little bit to the 4-hour half-day chart. What do we see? Well, again, we see a real sliding sideways for many days, and then of course we had a little bump up and then down on the 4-hour, which means to you that, of course, that's why we look at the big chart. That would have faked us out if we were trading just the 4-hour chart instead of the 2-day chart. But we do see a nice clean breakover, and it broke through our 2-day trend line. We will just watch that. We'll pay attention. Again, if you are in an inverse SPY fund, you might look at taking some profits now, but of course, we have no confirmed move. We just have a little schizophrenia between the 2-day and the 4-hour or half-day chart. Now, let's range back out one more time to the 2-day chart, and we'll look at the Qs. That is, of course, the NASDAQ 100. We see that, again, very similar to the other charts. It crossed over back in early June. Actually, it was a little later, a couple of days, 3 days, 4 days later than the S&P. Moved down and then bumped up thanks to the Fed, and then moved back down again. And again, not 3 good candles connected, and a pushing through, not nearly as strong as the IYY, the total market, and the S&P 500. The derivative oscillator maintained about the same energy, and there was a bit of a converging. Of course, we don't have anywhere near crossing yet on the 2-day chart. Let's look at the 4-hour chart, the half-day chart. What do we see? We see barely pushing through the 2-day trend line, and of course, it did cross over in the morning on Friday the 10th. And has moved up, but not nearly as strong. However, interestingly enough, look at what the derivative oscillator did. It actually crossed over into the green on the morning of Friday, the 10th of July. So again, we will watch this with interest. It is not a strong push through at this point, but it is a push through on the 2-day trend line, and it is a crossover on the 4-hour chart. It is not our 2-day chart. But again, pay attention. There are some hiccups in the down movement. It may very well continue to roll over and move down again. Pay attention. Now, let's range back out to the 2-day chart, and let's look at gold. What is gold doing? Well, we had a confirmed down move in gold with many different candles connected. Looks like about 4, almost 5. And we had a crossover on Friday in gold. Gold itself was up a mere 0.12%. Okay, that's a little over 1/10 of 1%, not much. Derivative oscillator is still red in the down move. There appears to be some closer movement together of the MACD and the MACD signal line, but still in a confirmed down move on the 2-day chart. Let's quickly look at the 4-hour chart in gold and see what it tells us. And of course, it did cross over back actually in the afternoon of the 9th, going into the 10th. It also has green as far as the derivative oscillator goes, but you can see that gold is sliding pretty much sideways. It's not even gone higher than the market opened on the morning of the 7th at this point, and gold is below the 2-day trend line. So even though we have a crossover going up on the 4-hour chart, it has not had enough energy to make it through the 2-day trend line. Gold, again, is a confirmed down move on the 2-day chart, a little bit of an up move on the 4-hour chart. It is still down for our purposes, and of course we'll keep an eye on it, but not nearly to the same extent that we will the indices, particularly the SPY. That is where we ended the day on Friday as we go into Monday. Hope that you have a great week trading. Remember, join us every day for our daily review, and of course on Mondays you also get a double whammy. You get the weekly review and forecast that'll also be available for you. chartingwealth.com. You can follow us on Twitter and Facebook, and you can sign up for our newsletter or website. Thank you so much. God bless. Wish you the best in trading and investing from chartingwealth.com.